Welcome, guys. It is Thursday night, July 17th, in preparation for Friday, July 18th. All right, let's before we jump into the market analysis here, we did close above this level. We closed above that 3 bar, kind of for a breakout type mode. But before we jump into the market analysis for Friday, let's continue on with our next chapter here of Market Wizards, Interview with Top Traders by Jack Schwager. We are on the chapter on Tom Baldwin, the fearless pit trader. Um, the trading pit of an active futures market is an imposing place. Scores of traders push over each other while shouting buy and sell orders at the top of their lungs. To the uninitiated, it seems miraculous that this institutionalized bedlam actually functions efficiently for a process for executing orders. In the frenzied world of future pits, the T-bond ring, with over 500 traders, stands out as one of the stands out as the unchallenged giant. The pit is so large that one side of the ring often does not know what is happening on the other side. By most accounts, Tom Baldwin is the single largest individual trader in the T-bonds pit. His trading size puts him at the same league as the primary institutional players. Single trades as large as 2,000 contracts, which has a $2 million face value in T-bonds, are not unusual for him. On a typical day, he may trade over 20,000 contracts, which is the equivalent of $2 billion in face value T-bonds. Baldwin is in his early 30s, having begun trading T-bonds a scant 6 years ago. Baldwin's entry into the world of floor trading sounds more like a recipe for failure than success. In 1982, with no prior trading experiences, Baldwin left his job as a product manager for the meatpacking firm to lease a seat on the Chicago Board of Trade. His stake was only $25,000. Out of this skimpy capital base, he had to pay over $2,000 a month to lease the seat, and at least another $1,000 per month for living expenses. As if this were not enough, his wife was pregnant at the time. Obviously, Baldwin is not one to play it safe. His aggressive risk-taking posture is one of the key elements of his success. He turned profit from the beginning. He was a multimillionaire before his first year was up, and he never looked back. Um, Although he declines to discuss the extent of his winnings, 30 million appears to be a conservative estimate. His true figure could be significantly higher. He said, without Brian Gelber's generous intervention, the two are friends and each admire each other's trading abilities. This interview would have never taken place. Gelber had warned me that Baldwin could be either abrasive or gracious, but be prepared for the former. As an example, Gelber said that Baldwin would probably answer the question of how he first got involved in trading with the curt response, I went down to the floor and I began trading. As it turns out, this was very close to the spirit of his answer. Um, Baldwin's attitude was neither abrasive or gracious. Aloof might be the best way to describe it. I had the distinct impression that the minute I hesitated in asking the next question, Baldwin would be gone. It was St. Patrick's Day, and this impression was intensified each time someone left the office saying that he or she would meet Baldwin at a local bar. I could sense that Tom was anxious to join them. I decided to conduct the interview completely impromptu, shooting off a new question the second he finished answering the prior one. Often his responses were quite short. I felt like a photographer stalking a rare bird. One false step, and the bird would fly off. I knew that at some point I would not be able to think of an immediate follow-up question. This happened about 40 minutes into the interview. I quickly glanced down at my index card, searching for a lead. Unfortunately, my eyes focused on a question that I had already touched upon, and though I tried to ask it from a different perspective, it was too late. The game was over. Baldwin said that he had to get going, and he excused himself. All right, now on with the interview. Schwager says, how did you learn to trade? One lot at a time. I always had an opinion. All day long, I stood there and developed an opinion. As I came to see my opinion was right, I was reinforced. Even if I did not make the trade, then when I traded, I knew from standing there 6 hours a day, every day, that most of the time I was right. I would see the same scenarios develop over and over again. He said, Swagger says, are you talking about market patterns or traders doing certain things? Tom Baldwin says, both. Market patterns would occur over and over again, or market players would do the same thing over and over again. You just traded it. Swagger says, what were your first few months like? Were you profitable initially? Tom Baldwin says, I think the most I was ever down was 19 ticks. So I pretty much started out profitably. Coming to the pits with no background, what was it that gave you enough of an edge to be right on the market? Asked Swagger. I worked hard. I stood there 6 hours a day, all day, every day. But you didn't have any experience to fall on. You don't need it. You don't need an education at all to do it. The smarter you are, the dumber you are. The more you know, the worse it is for you, said Baldwin. Swagger asks, for your type of trading, that is, scalping, when you put on a trade, what are you looking for? Tom says, to get as much as I can get out of it. I've taken full points or just one tick out of a trade. You just never know. You have to watch the market and get a feel for it. And if you are in the right position, just go with it. He said, on average, though, your trades will net you out a few ticks. Yes, I probably average 4 ticks profit on big positions. By the way, the bonds, I know the 30-year bonds trade in 1/32 of a position, and a bond is, I think it's $1,000 per point, if I'm not mistaken, guys. I'll double check that and I'll let you know. But so when he's talking a couple ticks, he's not talking the S&P 4 ticks make up a point. He's talking a couple, 1/32 of a tick, or 1/32 of a point is what I believe he's looking at there. But I'll have to, again, that's on the U.S. bonds. I'll have to see if that's the T bonds on that as well. But anyway, so probably on average 4 ticks profit on a big position. Swagger says, I assume your holding time is probably very, very short. Tom Baldwin says, I try to make it short. Are we talking about minutes? Asked Swagger. Yes, or seconds, just because that is less risk. The object is always minimize your risks. Have you always been a scalp type trader? Well, I have evolved from pure scalper to combination of scalper and speculator. Swagger asks, right now, what percentage of your trades are position versus scalp? Tom says, a small percentage, well below 10%. Basically, then, you are using the same basic trading style you started out with. Exactly, says Tom. Do you use any technical inputs? Yes, I use charts. Do you use intraday charts since you are trading short term? He said, oh no, he used bar charts. If you look at the chart and say, I'm basically bullish, do you primarily scalp from the long side? Not necessarily, he said. I would start with an opinion, but if I saw something to change my mind, I would adjust. Swagger asks, is the fact that you started off with chart influence trading bias a key element behind your winning? Tom says, yes. Were there periods when you were unsuccessful, or did you remain consistent? Consistent. You can see Tom's answers are very short and to the point. Didn't you have any losing months? Yeah, I had 1 or 2, but not 2 together, said Swagger. No, never. What percentage are successful to the point of making and keeping at least a couple of $1 million? Tom says about 1%. In other words, a very small fraction of traders. Right. It's like any other industry. How many people get to be the president of General Motors? He said, Swagger asked, do you have an opinion about what separates the 1% from the other 99%? Tom says, yes, it's a lot of hard work for one. It's perseverance. You have to love to do it. Also, in our business, you have to have a total disregard for money. You cannot trade for money. Swagger says, do you mean as long as you like the position, you stay with it, that you cannot think, oh, I'm losing $1 million on this trade, and with $1 million, I could have bought a great house. You can't translate it into real terms. Tom says, exactly, but most people do. Um, Swagger says, I guess another way of saying it is if that you have to have almost no fear. Right, says Tom. Um, is there a characteristic of winning traders that they have? Is that a characteristic of winning traders that they have less fear than the losers? Tom says, yes. Can you size up a new trader on the floor and tell if he's going to make it or not? Yes. What kind of things would tip you off that he is a loser? Well, most important, says Tom, losers don't work hard enough. Most people walk in and think there's a 50-50 chance on any trade. They don't think that there is anything more to it than that. They don't concentrate. They don't watch the factors that affect the market. You can see it in their eyes. It's almost as if there's a wall in front of their face. By factors, says Swagger, do you mean fundamentals? uh, Tom says, no, paying attention to what other markets are doing, such as the Dow, the Jones, or gold, watching the traders in the pit. Swagger says, patterns? Yes. Swagger says, in other words, they are not paying enough attention. They are standing there trying to pick a trade here and there, but they are not absorbing everything that is going on around them. He said, right. Also, their experiences are usually their expenses are usually way too high. They cannot stand there and hack it long enough to pick it up because it's like any job. If you stand there long enough, you have to pick it up. It's just a matter of how long can you afford to stand there before you do. All right. A lot of reading through this. I kind of like the Tom's answers, his short, to the point answers. So we'll jump back into that tomorrow. No, we won't. We'll jump back into that Sunday night. All right. Did I get tomorrow night off? Okay, so wanted to jump into the daily candles here. I think during the day we were saying, that because of where we opened up at, I felt like there was a good opportunity for us to close up above this these prior closes. Sure enough, we did. We even closed up above the upper three bar, and so that's something that we got to be cognizant of tomorrow. Not try to fade this too early or anything, because we did kind of break out a little bit to the upside of this. Also, I wanted to show let's go back here. That doesn't, I mean, it does show this volume here, on the 16th. So that volume on the 16th on the, let's see, that was volume on the 16th here on the ES. We left that tail down below. I think that shows up better on the SPY. Let me jump over that real quick. Yeah, the SPY shows it better. It shows it left a long tail there. And you can see that volume, that volume that came in on that tail when we left that spike down tail and closed back up was the highest volume since back at this V bottom back at April of 2025. So that this V bottom or this spike down close up was one of the highest volumes, which of course led to today's follow through to the upside. I believe on that. Okay, so one thing I did want to show here on this, let me go back to the ES. So you can see I marked this horizontal line, or I'm sorry, vertical line here, back on what day is that? 15th. Well, the 16th, so on the 15th, our slow line was at 56.82. Then we dropped down to 55.39. Then today we dropped down to 52.41. So the last 2 days on this move up, so we've been moving up these last 2 days, had that spike down, move up, but we're starting to get that slow line turnover. I just thought that was interesting to note there. However, I wanted to look here at the internals. Okay. So on the internals, we talked about this last night. 3 points down from this 1948 high is 1648. We dipped, I believe, just slowly below it. We dipped to a low of we touched it, 1648 to the dot on the low today. So we touched that low, 3 points off that low. So we want to be cognizant of that, guys. If we are below this 1648 tomorrow, You know, we want to be cautious to on any shorts that you're entertaining, because that would bode for a long only type environment until otherwise proven. Um, so we want to be cautious of that. Um, that's it. Yeah, I want to be cautious because that could be the breakout above there. We did take it out on higher volume, spiked up. Yep, I saw that. We did take out the top. Oh, that was the other thing I wanted to mention. We did take out, sorry. So this was a on the SPY. Let me get back over here, SPY. Um, on the SPY, this has been a wide range 7 day. You know, this big down day here was a wide range 7 day. We had held that pocket, spiked through it, and then within 2 days we have taken out the top of that wide range, you know, kind of wide range reversal candle. So if this was thinking about this on a 5 minute pattern or something where you have a big spike down, and then you come back up on volume and close back above that, you want to be cautious shorting anything right above that. You know, you want to give it some time to run, give it some room to play. Now, obviously, if this does a false breakout to the upside and starts breaking back down into this, that would change that picture. So, but we want to respect it. If we're moving back up through here, be cautious. Let it have some time to run. Let it have a couple days to run here before we get too short-minded on that. Um, internals, I went over those internals on that. You know, the 1648, if we're closing down below that 1648. Number 7. Oh yeah, so on the dot D chart, uh, so here on the dot D chart, we basically on mine, I know my janky Russian, you know, Keltner channels here. We moved up here today, you know, from yesterday's close. Today we opened up. We did not trade below that opening price low. Instead, on a 15-minute basis, we just trended up. We did not touch this the mid Keltner channel line. So this is the pink one's the Bollinger mid Bollinger band. So we did not touch the mid Keltner or the mid Bollinger band on mine. So that lets me know that there's a greater probability of at some point tomorrow coming back down and touching that mid channel there. And then the last thing is so when we have these kind of a trending days, one of the plays is on this 5 minute dot D. So this is a 5 minute dot D chart. If we open up, let's say we open up outside this upper Bollinger band, this upper Keltner channel. If we open up there, and here's a little caveat to this setup, um, and the ticks do not open, you know, on like over 1,000. If we're open up like, you know, kind of blase ticks, and we open up kind of blase breadth, then you can kind of fade the first move outside of these bands. So if we open up below, but kind of open up blase, well, it's a fade that move and go back towards the middle. You know, don't be short necessarily, but fade it back towards the middle. Conversely, if we open up above those bands on a blase tick, a blase breadth, then you could fade it to move back down into those bands. That is a Linda setup. So after trending days, I kind of keep an eye on that to see if there's a setup or play. Now, I have had those days where, you know, I try to short or go, you know, usually it's trying to short that. You know, if it opens up below, those usually work out pretty well. If I try to short those, you know, it could get another day of trending, you know, before it pulls back off that. So anyway, just something to look at, something to pay attention to tomorrow. Again, guys, let's keep our eyes on that VIX. If we're moving down below that 1648 number on the VIX, be careful with that. Also, be careful the fact that this is looking like it could be a breakout to the upside. Let's get the yeah. So this is SPY. You know, it could be a breakout to the upside, or it could just be a larger, you know, kind of a larger box that's you know, happening here. You know, so we don't know that yet, but be aware that if this is a breakout, we could have that further continuation and stronger move up tomorrow on a Friday. And keep in mind, it's a Friday environment. All right, guys, safe trading tomorrow. It's the end of the week. Let's try not to focus on the money. Let's focus on these setups. I like some of the stuff we're reading. I think if we can keep pushing each other towards those directions, those non P&L focused things in our trading, we will continue to push each other to get better. All right, guys, we will follow up tomorrow in the room later.